Welcome to TradeTheMBI.com. This is John's reports for the 27th, and the runaway train of the market continues. And when we talk about that, it's just a sense that we've got this pile of data that skeptical to believe in some cases, that constantly gets revised, and not in a great way in most cases. And there's no other place for real money to go other than in commodities and or the market. And commodities from their move have made a significant run, and the question then becomes, how does it resolve itself? And at the end of the day, when you look at the broad debt of the U.S. and the fact that now borrowing costs are greater than even defense spending, which is the largest expenditure, you're going to have nothing but continued adding to that. And there's no way you're getting control, number one, of deficits. Number two, any idea of debt reduction is just out of the question. So how fast does that begin to spiral, and what's the effect? Well, the effect of it is kind of complicated, because while it could have a huge negative draw on the economy, the overall numeric value of the market will technically rise because of that devaluation. So it's kind of the situation we're in, and a lot of people don't really know how to navigate it, because we really haven't been at what you might see as the end cycle. I mean, as this train continues to move forward, it's accelerating, and you just don't know which curve is going to derail it. And that's really what we're looking at this particular stage. And that's where this wall of fear that keeps being climbed hasn't stopped. Now, of course, there's excitement. There's the potentials that new technologies or whatever, and this reminds me a lot of the 2000 dot-com boost, where everyone now is in the AI trade, and it can't help but remember companies like WorldCom and that, which were seen as, bringing forward a great new era, but it all fell apart because there wasn't that substructure to support it. Now, do we have that when it comes to AI, and how will it affect the displacement? I don't know that we can convert to robotics in so many different situations at a lightning speed, particularly with the infrastructure grid that we have from electricity. We certainly can't support EVs at this particular stage. So yeah, potentially there's some great things, but also could be a little ahead of ourselves in that. And that's the thing of timing. Of course, easiest way to look at it is just to follow the money. Now, NASDAQ, when we look at those readings from MBI, you see the magenta right at the edge of taking over yellow, bringing into the positive. Definitely from a NASDAQ standpoint, the short increase is dramatically increased. But we've got a full reset on everything. So from that standpoint, not horrible. DOC, you still have steel rising and coming from underneath red. Not a bad situation. You got a resurgence here of the shakeout. However, it's going to be difficult to take out that previous high, which means that if we do move back to the highs, you're likely to see higher highs on lower shakeout reading, and we know that would be a negative. But for now, it's enough to hold things where they are. Of course, you got the presidential debate, and if Biden comes out and doesn't appear to be dysfunctional or whatever, that would be a win from a market standpoint. And then it's just nominal policy issues, because at the end of the day, structurally, there's not a whole lot any new president's going to be able to do as far as change goes, as it relates to what the situation with the economics are. And of course, the bond market has been ridiculous, pretty much suggesting that the Fed is going to zero. And why would the Fed go to zero unless there was complete collapse or something? So you have the stock market at odds with the bond market. Normally, you would say the bond market usually ends up being right, but they've been incredibly wrong. I mean, we've talked about that for well over a year, with some of these moves going back last year and stuff that I just laughed at, because they were just so counter to basic economics. But in this world of pretend, we're really not talking about real economics anymore. Because when you have this degree of intervention that isn't actual market based, it's hard to make predictions on where things will go, because as it is now, the rates are actually too low for what they should be, and have been for a very long time, and that has created distortions, and these distortions have to get worked out. Now, you can see that from a commodity standpoint, and gold continuing to rise. Oil also is going to continue to rise. We've seen a little bit of a setback in gold in the last couple of weeks, and that's just because the perception was that there was a slowdown in inflation. I don't know that that's necessarily true, but we can follow the numbers on it. And I think that when you look at the basket of goods that people have to buy versus what the Fed counts as inflation, very different. And this is where it was the laugh in the euro trade here, where we kept seeing it rise to the dollar. And it's like, okay, well, you talked about the imminent dollar collapse. It's not happening. Because all the other currencies are related to it, and they're still buying all those commodities out of U.S. dollars. And so, as long as oil and those things and inflation is elevated, uh, why would you be in a euro unless you live in the eurozone? And in that case, not that great because the energy costs and everything, and particularly as we head towards winter in a soft situation where alternative energy is being required and it isn't sustainable at this particular stage. This is still rather high for a euro, relatively speaking. Should be subpar to the dollar, given what we're seeing overall from a growth and capability standpoint. And when we look at gold here, it has taken a bit of an ease as far as that goes, and still within a little bit of a weak position. But as soon as the readings come out that with the oil rise, there's a rise in the CPI situation, going to be right back on another run to the upside. And I think you'll see the same thing takes place with crypto. You're just in that same period where that imminent threat of out of control inflation, and that's where the early rise was, is that everyone thought, well, once inflation starts, there's not going to be any controls on it whatsoever. And I think that's misguided because inflation is going to run in cycles and it's going to be in spurts, and to think that it's just a linear increase or whatever. Now, if it is, that obviously would have been catastrophic, but um, there are balancing effects on that, and I think that you can see it. You bring in large numbers of immigrants, and that you keep wages down. That helps keep things in tap, and that has been a strategy since, when I was a kid, used from the '80s, and particularly witnessed that in California, as it was able to keep wages and that down, and that is the bigger driver of inflation all the way around. It just means a lot of people are getting squeezed from an ETH standpoint. Still within a reasonably bullish situation, and all these fillbacks are actually rather healthy overall. From a Bitcoin one, though, they talk about the Mt. Gox payments could take 4 months or so, and I think it's relatively odd to think that there's just going to be this massive supply that's all of a sudden going to be dumped on there. It's possible, but I think that's much to do about nothing. So, from a market standpoint, not a whole lot of anything, but a whole lot of volatility. We saw some pretty good sized moves overall within these back and forth, and then back up to the rise again, only to have it filled back down. And that all was a result of that spike of the MBI white, and then the spike of the magenta after it, and they created their little inverse situations at that particular stage. Rising gold into this situation right here, interesting, with a very weak shakeout relative strength when you look at back over here on the 617.18 rise, much stronger. So you still have a lot of softness, and intraday you can already see we've had a pretty good sized dip all the way down towards that previous low. Where was the number? We come in right here at 15, 50, 51, 50, yeah, 55, 15. Pretty decent move down all the way back up to 32. So that's a pretty significant switch. And of course, all this could change based on the debate that takes place and how that flips things. But overall, there's a lot of concern, and justifiably, but that's always the case in most economic situations. But you can see how beautiful it was the other day from the pre-market, continued all the way down. And then as soon as we got to the cash open period, buyers lifted things back up, and that was about, again, options. And these option adjustments really make a difference because they've got to balance the book at some point, and that creates that intraday volatility that I think is still going to continue and probably become even more excised. And I think even now you're seeing that here in this pre-market. Kind of leaves for somewhat boring intraday sessions, but that's why we like futures from a 24 standpoint, always going, because that's where they take advantage of the global ability to move the money around at different time periods. So you can see we've faded back down after the pump late market, And here the European session faded all the way back down, and then it's just been bought right back up. So we'll probably end up not too far off the pace to start the day. But I think that you can see that there's a lot of uncertainty that's growing. It's not getting any more resolved. And as long as that's the case, I think that we'll probably still try to edge forward, but under very spurt kind of movements, and I think that's going to start to increase even more. And if the data becomes more negative, and that could actually end up being net positive for the market, because their belief that the Fed is going to step in and move to zero could be a reality. And if it did, it would be a huge savings for the U.S. from an interest standpoint. But it would also throw the market into a ballistic, parabolic move to the upside. So we'll just follow it as it goes. As always, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.